Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's get to some of the stories we're following now in the BNN Bloomberg newsroom. Prime Minister Mark Carney says he spoke with U.S. President Donald Trump about the new Gordie Howe International Bridge that will connect Windsor, Ontario to Detroit, Michigan. Carney says he explained that Canada paid for the construction of the bridge and that the ownership is shared between Michigan and Canada. Trump has been threatening to block the opening of the bridge until the U.S. is, quote, fully compensated and given ownership of half of it. The crossing is nearly complete and is expected to open later this year. Shares of Organogram Global are slipping right now. They're down more than 7%. That after the Canadian cannabis company reported first quarter revenue that came in below what analysts were expecting. The company also posted adjusting earnings that fell short. On the upside, Organogram swung to a profit in the quarter, driven by higher valuation gains tied to shares held by British American Tobacco. Shares of Hasbro are rising today, up more than 7%, almost 8%, really. The toy manufacturer more than doubled annual revenue in its latest quarter, driven by its popular card game. Tie-ins from famous franchises also contributed to revenue growth. Hasbro is also buying back $1 billion worth of shares and is partnering with Warner Brothers to become the global license holder for Harry Potter toys and games. And looking at the markets, the TSX continues its rally. If this continues, it'll have another record high for a close. It's up by 0.6% right now. South of the border, a little bit more mixed down there when you take a look. Oh, everybody's now back in the green, although barely for the NASDAQ. But you see the S&P 500 again, just below that 7,000 mark, trying to get over it. And the Dow Jones surging well above 50,000. It's up by nearly half a point. And CTV's Heather Wright has more about the impact of the U.S. fuel blockade on Cuba as the country faces its worst economic crisis in nearly 70 years.
This is just the latest sign of the dire situation unfolding in Cuba. There isn't enough fuel for airplanes to refuel on the island as the communist nation struggles during a deepening oil blockade.
We came to Cuba knowing what to expect. There's some things you'll have every day, some things you won't. I mean, that's a norm for here.
But what has been the norm is quickly deteriorating for the people who live in Cuba, with shortages of food, fuel, and medicine. Air Canada has announced it's suspending services and will send planes to repatriate the roughly 3,000 passengers still in the country. WestJet, including Sunwing, has suspended ticket sales to Cuba and will begin what it calls an orderly wind down of its winter operations there, while Air Transat has issued a travel notice allowing for flexible changes or cancellations. This all comes as Cuba experiences the worst economic crisis in nearly 70 years.
By the typical definition of what we think of as a failed state, Cuba is sort of on the cusp of it.
For decades, Venezuela had been the primary source of oil for Cuba, a source that was cut off when the United States captured Venezuela's president in January. Then U.S. President Donald Trump said he would impose tariffs on any country that sells or provides oil to Cuba, further depleting its sources of fuel. The government has closed some hotels and is relocating guests to save on resources. Fuel sales are being limited while school and business hours have been reduced. Tourism is critical to Cuba's economy, and those returning home worry about ordinary Cubans.
It's just really unfortunate because of the Cuban people, and they have so many shortages there as it is.
Cuba has said it is open to negotiating with the United States to end this oil blockade. Meanwhile, the government is telling its citizens to prepare for hard times beyond what they are experiencing now.
That was CTV's Heather Wright. And let's talk about some trending stocks right now. And the first one we're going to bring up from New York is Ferrari. Race, I love that's what it's called. But up after Q4 earnings and apparently a demand for their supercars and their specialty cars surging. And that's what is helping them meet their targets. So you can see Ferrari is up 10% right now as we head into the day. A couple others we want to look at. Paramount. Of course, this is the one that's in that battle with Netflix for Warner Brothers. So it's sweetened the deal for that hostile takeover bid for Warner Brothers. It says it will cover. It now says it will cover the $2.8 billion termination fee that Warner Brothers would have to pay to Netflix if it ends the already agreed upon deal with the streaming giant. It would also backstop a Warner Brother debt refinancing and pay $1.5 billion in fees associated with that if necessary. Spotify. It is also surging today, up 14% right now, and that's because had a record number of monthly active users. 759 million was the first quarter. The first estimate was 752 million. It actually hit 759 in the first quarter, and it added 38 million monthly active users, surpassing its guidance for 32 million. In addition, the 4Q subscriber net additions of 9 million exceeded guidance by 1 million, and Spotify's forecast for 1Q MAUs and profits also topping the street's consensus. So it is having a good day indeed. Heading over now to the TSX and shop from Spotify to Shopify. It is up about 8% right now. And one of those days that the news on that one was, I'm trying to remember, I just had to pull it up here for a second. I remember it was, it raised for outperforms on its AI potential. We're seeing a few people, that's what it was, saying the AI benefits. They say Shopify will actually benefit from AI, not be hurt by it. So you can see it surging. Also up today, ATS 4.8% and Bausch Health up about 4.1%. Taking a look, though, at some that are struggling today. And this one really just tragic about Vizsla Silvercore right now. It is off. It's bounced back a little bit. It's off by 7.5% right now on the news that 10 of its employees in Mexico were kidnapped or taken. And now there are reports they found the bodies of 5 of them, and 5 other bodies were discovered. The investigation continues. It's not clear what happened there. For now, that mine, that project is on hold. It is shut down as police are involved in this, but you can see Vizsla paying for that. Also down right now, Celestica by 4% and Energy Fuels dipping nearly 5%. And we'll have more coming up after the break. Time now for Hot Picks, and we zeroed it in on 3 plays in the biotech sector with Jeff Meacham, Global Head of Healthcare at Citi. We kick things off with his first pick, Eli Lilly.
I do feel like with Lilly's injectable business, Zepbound and Mounjaro are both growing nicely, but also orforglipron is really one of the reasons why you want to own this stock is their pill, which is going to launch, in a maybe an April timeframe. I think it's going to really dominate.
That of course is a pill weight loss drug.
That's correct. Yeah.
They have other irons in the fire, though. They have a medicine in inflammation as well. Can you tell us a bit about that? Yeah. So what's interesting is that the GLP-1 mechanism of action is broadly applicable. And what Lilly's finding is that it could help amplify the clinical effect in other diseases. So they just recently had data, for an inflammation drug, Taltz, that the GLP-1 makes it better. So I think that could, provide an extra leg of fuel for their inflammation business. Maybe down the road, oncology or neurology, GLP-1s work, in a broad way. And I think that that's something that obviously not in the stock at all. Can we move on to Vertex Pharmaceuticals? One of their core businesses, cystic fibrosis.
Yeah, this is a great business for them. There are very few competitors here. Vertex has really dominated and probably should continue to dominate really. And the IP goes really quite far out. We're talking late 2030s. The issue with Vertex is really, what is the encore to their success, right? So they have a drug for non-opioid pain relief. and they have a cell therapy, a gene-edited product for sickle cell anemia and beta thalassemia. And now they're adding a drug. We'll see maybe this Thursday when they report, fourth quarter earnings. There's a drug for a kidney disease called IgAN. So a fourth, drug to the mix here. So that's probably the bigger focus of Vertex. The CF business, I wouldn't ever say autopilot, but it definitely feels like, it's sort of, it's going on autopilot.
And then Regeneron Pharmaceuticals, you see this stock climbing to the $900 range. What are their crucial growth areas?
Yeah, so Regeneron has had for many years, 3 legacy businesses. So Eylea for an ophthalmology drug, Dupixent, which is a drug for many different types of inflammation conditions, and then Libtayo, which is an oncology drug. Those are still, growing nicely. Eylea has had some generic competition and had some branded competition, but that's fine. It's held its own. But the reason why we like the stock here is the pipeline. So they have a next-gen drug for melanoma that could be, anytime in the next couple of months. And then a very, very deep pipeline in the oncology hematology franchise that, in the next, call it 1 to 2 years, we'll see a lot of data points, a lot of phase 3 reveals, phase 2 reveals that should be very positive for the stock.
What is the latest thing in oncology? Can you generalize for us? What are promising areas of research right now and new drug development?
Yep. Yeah. There are a couple different technologies that have been used. Antibody drug conjugates. This is where you attach a toxic payload, a bit of a silver bullet approach to a tumor. And then immuno-oncology, same thing. It's tools that have been around for a few years, but we're getting much better at engineering more specific immune responses to the tune of what called bispecific antibodies. So there's a lot of excitement there, and there's a lot of companies in the mix too. So it's not just about gene and cell therapy. There are many, very, I would say, validated and foundational technologies that are still growing quite nicely.
And a company like Regeneron, what's a crucial driver? I mean, they obviously want to get a blockbuster. Everybody does. Would they ultimately get taken out if their product is big enough?
It's a great question. Yeah, it's one of the bigger, larger cap biotechs by market cap. But they have a very deep science, a great, technology platform, and they're in multiple areas. So I think the big driver here would just be, turning the data card over on many different things in the oncology hematology pipeline, but also the inflammation pipeline. Those are the 2 core areas for them. It's not that, that they need more, but I think they have so many assets that are in early to mid development that are really kind of, could be groundbreaking. We'll have to see.
Andrew was speaking with Jeff Meacham, Global Head of Healthcare at Citi. Well, President Donald Trump says he would start negotiations with Canada over a new bridge that connects Michigan and Ontario, threatening to block its opening until the U.S. was given compensation and ownership of half of it. For a cross-border perspective, we're joined now by Bloomberg's Derek DeCluet. He is executive editor for Canada at Bloomberg News, and Bloomberg Washington correspondent Tyler Kendall. Thank you both for joining us. And Derek, we're going to start with you. We're starting to get some reaction from this side. We heard from the Prime Minister. What did he have to say about how this is all unfolding?
Yeah, he said that he'd had a conversation with President Trump this morning and that it was a positive conversation. He didn't get too far into it, but explained that Canada had paid the upfront cost for the bridge. At the same time as he was saying that, the Transportation Minister, Stephen McKinnon, gave a statement at a separate press conference where he talked about this bridge being, built to last over 100 years, and it being kind of this symbol of Canadian-American cooperation and friendship, and that it will persist long past the Trump administration. Was kind of his point. So certainly a message of cooperation and sort of economic integration coming from Ottawa.
And then south of the border, Tyler, in Washington, are we getting some reaction? There were some rather outlandish statements made by him in this the post he put out last night.
Right. So I think the key of President Trump's post when it comes to this threat over the bridge is he's talking about restoring respect for the U.S. between the U.S. and Canada, because this really just marks the latest bid at escalation between the two countries. Now, of course, as Derek just outlined, it appears that there could be some momentum in a positive direction, but we should also probably just mention that at this point, it's unclear how President Trump would really make good on these threats to ultimately block the opening of the bridge. But it is just the latest rhetoric that we've gotten from this White House in recent weeks, where we've seen a really large escalation, right? Perhaps started with the rhetoric in Davos, President Trump revoking Prime Minister Mark Carney's invitation to the Board of Peace, then threatening 100% broad-based tariffs over that limited trade pact Canada was reaching with China, 50% tariffs targeted at Canadian aircraft, threatening to decertify those planes as well. The list at this point has been going on, though, of course, as you well know, I don't need to tell you, this relationship has long been strained. Mark Carney, of course, broadly campaigned on countering this White House, particularly when it comes to trade. And there has been this lack of progress and frustration from both sides on a trade deal. While, of course, we know the bulk of Canadian exports are insulated by the USMCA, there's been some frustration when it comes to those sector-specific tariffs like steel and aluminum. So it really feels like this is perhaps part of a broader base effort by this White House to position itself ahead of those critical USMCA renegotiations over the summer. We're going to be talking a lot more about escalating tensions, maybe perhaps from both sides, as we head into those really important talks.
Now, the president may find himself with some pressure, because this has really triggered a lot of state governors and state senators. They've been responding to this as well, Tyler.
Right. So at least from the Democratic side, we heard earlier today from Michigan Senator Elisa Slotkin, who is now blaming President Trump, particularly when it comes to his trade policies, saying that we have seen some of our allies look outward to try to diversify their economies away from the U.S. and away from a reliance on doing trade with the U.S. because of unpredictable policy making out of Washington. Now, you ask the White House, and White House officials, they'll stand by President Trump's statement here. You'll recall Bloomberg Television had a sit down with the U.S. Commerce Secretary Howard Lutnick amid all of this ramp up in rhetoric a couple of weeks ago, who ultimately said that Canada's reactions, Canada's actions are political noise, as he described it. So it sort of shows you both sides of the aisle, as Republicans have largely lined up behind President Trump and his tariff policies, though I will point out that we are watching a crucial vote in the U.S. Congress later today that could ultimately curb the president's authority, particularly as we wait for the Supreme Court to weigh in on his broad-based tariffs enacted under IEEPA.
And Derek, have we heard anything from this side in regards to CUSMA and any kind of an impact this latest comments from Trump may have on the negotiations?
No, not really. I mean, I think that there's still very much a sense that the CUSMA thing is going to move slowly and probably, as Tyler said, with a lot of bumps in the road. It is interesting that that the president talked about negotiations in that post last night. Of course, there was already a negotiation. There's already a deal. Canada pays for the bridge. Canada gets the toll money until those costs are paid back, and after that, Canada and Michigan essentially split everything. So I guess one of the more confusing aspects of the president's post is saying that the U.S. should own at least half of the bridge. As far as we can tell, it already does via the state of Michigan.
Okay, we'll have to leave it there. But Derek, Tyler, thank you both for joining us today. We appreciate it. Derek DeClude is executive editor for Canada at Bloomberg News, and Tyler Kendall is Bloomberg's Washington correspondent. Coming up, prices for precious metals are surging, and they're also going up and down at times, too. It's been a wild ride for them. We'll look at what that means for Canadian jewelers after the break. Rising prices and the fluctuations that come with it in precious metals are shaking up the jewelry industry. Joining us now to discuss these challenges and opportunities is Sue Henderson, founder and CEO of jewelry company Suitable. Sue, thanks very much for joining us today.
You're welcome. Happy to be here.
You've been around for about 20 years. What's it like dealing with what we've seen over the last year, essentially, for gold and silver. How do you navigate that with your company?
I've never seen anything like this in 20 years of selling jewelry. And we do a wide range. We do real gold and we do vermeil, which is sterling silver with gold. I see on website that prices are estimates only, and they can't display prices in real time because they're just changing so much. Makes it very hard to run a business.
Yeah, and how do you deal with that? I mean, are you literally having two pieces side by side and one costs more than the other because of when you bought the gold or bought the silver?
Yes. We're a medium-sized company. So yes, you do see that. Like I was in the store yesterday and someone wanted a real gold ring. And I said, you better buy it today because tomorrow it's going to be a different price. I looked at it and thought, well, that one hasn't gone up yet. So yes, it's changing every day. And we're in the middle of designing a real gold jewelry line launching in March. We had it set at one price 3 weeks ago, and now our goldsmith's saying, no, like it's going to be up. So it's really, really volatile and very challenging in our business.
And with the price of gold, do you kind of try and buy the dip, or is there a dip, or how do you go shopping for the gold that you need to make your jewelry? And silver too, of course. Silver's as crazy.
Silver's as crazy, and we sell a lot of silver, and also silver is the base metal for vermeil, which is a very popular demi-fine alternative to real gold. So yeah, the good part for Suitables is we go direct to manufacturer, direct to our suppliers, so we can get a bit of a sharper price. I feel very badly for the small businesses that are sort of going direct to local wholesalers, because every person that touches it, the price increases. So yeah, we're in a good spot in that we go direct to manufacturers, but those prices are increasing from when we placed the order a month ago. I just got an email today with the price, what I thought I was getting a month ago, and being smart, they're charging me the day they deliver it versus the day I ordered it. So it's complicated.
And how much of a change was that?
Whatever silver went up whatever gold went up in the last month, it's up. It was up over $5,000 an ounce. So I don't know, call it another 15%.
And then you have to, how much, you can only absorb so much of that. You have to pass on some to your...
Some of it we have to pass on. Last year we did well because we were cheaper than competitors, and we decided to just leave our prices and see what happened. So people were finding us for real gold, and we're known more for demi-fine. So that was super interesting. But then now we're having to pivot this year, and we're going to be increasing our prices again. And we're also, for the spring, doing some alternative metals. We're looking at brass as the base to put real gold on top of. It's a real science. It isn't just like, is it costume? Is it demi-fine? Is it real? There's a real science to this. And we put real gold on top of everything, and you dictate how much gold. And you don't want to compromise on quality, so the prices are going to have to come up.
I was going to ask, are you finding more people going to the demi-fine that you mentioned or brass as the base?
Well, that's what we're exploring. You'll have to ask me in the spring, but we're definitely going that route to try and maintain quality at a reasonable price. We're known for that in the business. We don't wholesale. We go direct to consumers with our 3 Canadian stores. So we're trying to keep those prices competitive and one of the best in Canada.
And are you finding it harder to find the metal, or your suppliers to find the metals because of demand for it?
No, the supply is there. They just want it's at a premium. It's the price. The price is high.
And so with these prices, are you looking at obviously always looking at ways to save money, but have you had to look at different parts of your business and maybe cut back in different places?
I'm looking at all of it. If you think about it, first it was COVID, and we were closed for 106 days, retail stores in Ontario. Then there was tariffs, and then the silver, then the gold increases. Cost of rent is up, cost of living is up. So we pay our wages are higher, minimum wage is up. So it isn't just one thing, and particularly for jewelry companies where the cost of goods sold is up so significantly. Our profits are down significantly, and we're trying to figure out ways to pivot to catch up, and that's looking at other materials.
And are other businesses in this field, are they feeling that as well?
Yeah, I follow everybody, competitors in our industry, and we're seeing emails from them regularly saying, we're all transparent with our customers, saying, shop now, prices are going up, but how many emails like that can you send out? It's a real thing, but it's happening almost daily right now.
And did you notice, this is Valentine's, I imagine this is one of the busier times, Christmas, another busy time for you. Did you notice a drop off or people hesitating?
It's kind of the reverse. It's softer sales when people don't have to buy, when it's like pleasure buying and retail therapy, as I like to call it. And then when there's an actual occasion like, Hanukkah, Christmas, Valentine's Day, people are coming to us for the gifts. So that's gratifying to see that when they actually need stuff, they're still coming back in the same numbers. But it's those times in between that are harder.
Yeah. And you mentioned the stress of this. If these prices keep going up, I mean, silver's back down again, but gold is still well above it was above 5,000 today when I looked, I think. Can you absorb that? How much, what's your concern if it goes up to 6,000 or 7,000? You just have to adjust?
I mean, we're a medium business. We've been here for 20 years. We'll keep pivoting until we pivot no more. But yeah, I mean, we're survivors. We've been doing this a long time. And again, those that know what they're doing, we can really dictate the science of what we're creating, brass underneath of how many microns of gold on top while maintaining quality, but pivoting with materials instead of putting sterling silver under everything. Some of the chunkier pieces, like it depends on the piece, right? A chunkier piece, you'd probably put brass under now. But some of the more dainty things we keep at Vermeil, which is sterling silver with a thick coating of gold on top.
Okay, we'll have to leave it there. But Sue, thank you very much for joining us.
Thanks for having me.
Sue Henderson is CEO and founder of Suitables Jewelry. Up next, we talk to the CEO of Columbia Sportswear about the company's plans for the year ahead. And yes, that Super Bowl ad. The federal government is looking to boost the number of EV chargers across the country. Energy Minister Tim Hodgson says Ottawa is planning to add 8,000 electric vehicle charging ports to Canada's existing system. The move is part of its new automotive strategy. This week, Prime Minister Mark Carney said Ottawa would spend $1.5 billion on EV infrastructure. The news also included the return of an EV rebate program. We are watching shares of Paramount Skydance and Warner Brothers Discovery. Paramount has sweetened its bid for the media giant and addressed some of the company's concerns. Paramount says it will cover the nearly $3 billion termination fee Warner will have to pay to Netflix if it ends the deal with the streaming giant. Warner says it will review and consider the new offer. Shares of Ferrari are rallying. They're up nearly 10%. The luxury automaker reported stronger than expected fourth quarter earnings, helped by higher prices and growing demand for customized vehicles. Revenues rose to 1.8 billion euros, topping forecasts. The car maker also issued an upbeat outlook for this year, signaling confidence despite concerns around global tariffs and trade pressures. Well, Columbia Sportswear is projecting modest growth in revenue and profit, with gains mostly in the second half of the year. Here to talk about earnings from the most recent quarter and the apparel company's plans for the year ahead is Columbia CEO Tim Boyle. Tim, thank you very much for joining us today.
I'm glad you invited me. Thank you very much.
We appreciate it. How would you sum up the last quarter from your position as CEO?
Well, it was better than what we had planned. It wasn't as good as we wanted, and it wasn't as good as prior quarters, the comparative quarter from the prior year. But, we're solid, and we've got a great balance sheet, and we've got great plans to go forward and continue to grow the business.
And were tariffs one of the main issues for this? What were some of the struggles for you in the last quarter?
Well, certainly tariffs are impactful. About 60% of our business is inside the U.S., and we import almost everything that we sell. So as everyone knows, it's a chaotic tariff environment in the U.S., and we're fortunate that we have a big business outside the U.S., especially in Canada. But yeah, tariffs are causing issues with virtually everybody that operates in this space, and us as well.
Have you looked at trying to bring manufacturing into the U.S.? Is that possible for you?
We've looked into it, but unfortunately, all of the infrastructure from making the fabrics to the technology around being a tailor and building products in the U.S., especially both footwear and apparel, is virtually impossible. The factories we work with that manufacture footwear, as an example, in Asia, have about 100,000 employees, and there's no way you could gather people in the U.S. to work in this kind of a business, making apparel and footwear. So it's literally impossible.
So what do you expect then for the next little while? Because I was just saying, over the last 4 years, you had steady growth for years. The last 4 years since the pandemic, as you mentioned, has been a bit of a struggle. How do you break through that?
Well, for us, it's all about product. So we're very good at manufacturing product and designing products which are useful around the world and in great weather conditions, both cold and warm. And we've probably been underinvesting in our marketing efforts. So that's an area where we're focusing time and effort and getting ourselves better, more visibility to, especially to the younger consumers that we're looking for.
And what kind of a response have you had? You've launched a couple of campaigns, Accelerate Growth and Engineered for Whatever. How are they working? Are you getting a response to those?
Those have been very well received. You know, these things don't happen overnight, but they've been very well received. And you probably recognize some of the what we call activations that we've done over the last several months, just to be different, to portray ourselves as having a better sense of humor than many of our competitors. You know, some of our competitors treat their garments so seriously, and we make garments which are certainly capable of keeping you warm or cool, regardless of the temperatures or the environment. But we'd like to take ourselves a little less seriously.
And we're going to get to your beer ad in just a second, but I want to talk a little bit more about the international markets first, Canada being one of them. Are you looking, they outperform the U.S., are you looking at continuing to grow those areas? Do you see more opportunities outside of the U.S.?
Yeah, our businesses outside of the U.S. are growing more rapidly than the U.S. Obviously, the chaotic tariffs are impactful here in the U.S., and there's great markets around the world that we're starting to recognize that we can have a solid business. And that would include markets in South America, in the Middle East. We have a good business in the Middle East, surprisingly, especially in winter clothing. And we have great business in Europe. And Canada has been a long time market for us. It's quite close to the U.S., and we appreciate the business there.
How are you, I have to ask, how are you marketing winter clothing in the Middle East?
Well, you know, it's interesting when consumers are traveling from the Middle East to Europe for a summer break or whatever, they're so used to being in hot weather that they get chilled easily. So they're buying both base layer underwear to be worn when they're traveling in Europe in the summertime, and jackets. So it's a good business for us, and the brand is well known and well respected there.
All right, and it's been, I guess, about 5 months, 4 months. I'm trying to do the math. No, it's only been 3 months since your son, Joe, became co-president along with Peter Bragdon. How has that transition been, and what has it been like for you to see that?
Well, it's been great. You know, both of those people, my son is obviously, we kid around him being at the company since 1980, you know, and he's when he was born. It's a small family business at that time, and so we've grown it together. And Peter's been with us for many, many years, initially as an outside attorney for the company, and then joined us as general counsel, and he's been with the company a long time. And his responsibilities over time have included not only being the company's attorney, but also managing our international businesses, especially those in the Middle East and South America.
Okay, now we're almost at it, but I want to talk about the bear. I won't say the proper term for it, but the bear beer. We'll leave it at that. How's the response been to that Super Bowl commercial, which I watched and actually I thought it was hilarious.
Well, you know, it's been a lot of fun, and the premise there was, you know, outdoors people, there's a very few times of the year where they're all going to be inside, and that's certainly in the U.S. Super Bowl Sunday. And if they're in their homes watching a television show, a game, they're going to be mostly watching commercials. And the biggest spenders on Super Bowl Sunday are beer commercials. And so we thought, you know, let's make a commercial for beer that nobody else can make. And I think we were successful.
And you can actually get the beer that's made with bear poop, although it's all been sanitized through, the water's all been cleaned, but there's still some of that beer actually available, isn't there?
There's still a bit around. Yeah, it's, you know, it's at a premium. It's a Reserva.
All right, it sounds lovely, Tim. Thank you very much for joining us.
Thank you. I appreciate your time.
Tim Boyle is the CEO of Columbia Sportswear. Up next, we'll hear from an aviation analyst on Air Canada suspending service to and from Cuba. That's next. Well, Canadian Airlines announcing their plans to halt all travel to and from Cuba following a shortage of aviation fuel on the island. We were joined by Stephen Trent, an independent aviation specialist, to get his thoughts.
I do think in terms of the long-term story, this is going to be a mere hiccup. I think over the short term, certainly there's some dislocation here when we think about what it means for individual passengers and for rerouting opportunities, for example. But I don't see it. I see it far from being a major blow.
But it will be tricky. People who've already bought trips to Cuba, they'll have to work out how to handle them if there's refunds involved, et cetera.
Yeah, absolutely. So those folks, assuming they have refundable tickets, they'll need to be recourse to them. Maybe some of them will want to reroute. And that equipment that and crew that Air Canada had been planning to send to Cuba is probably now going to go to other places. So that's going to take a little bit of time to get through the system. And then we're talking about apparently roughly 3,000 Canadian nationals in Cuba that need to get home. Figure a a narrow body aircraft to do those operations, and figure in 20 flights or so, and they can get that cleared out.
So they are introducing apparently a refund program, but I guess the details will emerge to a refund program for people who have booked, allowing customers who had scheduled departures to Cuba and experienced cancellations to get apparently automatically receive a full refund in their original form of payment. So they say there's no need for you to contact the Air Canada Vacations Contact Centre. Yeah. My experience, good luck getting through to anyone over there. But anyway, and the other Canadian airlines, hardly surprisingly, following suit.
Yeah, absolutely. So, this is one of those things, clearly that's beyond any of these companies' control when you have these sort of force majeure events. So maybe that's too strong a word to use, but we saw it relatively recently further down in the Caribbean when Venezuelan airspace got closed for a little bit of time, given the military action that occurred in that market. So there are hiccups along the way, but I would say certainly in Air Canada's case, this is relatively short-lived when we think about the long-term story. This is going to be a hiccup. Looking at the international strategy of the carrier, the fifth and sixth freedom rights they have through the region, international is a very good opportunity for the carrier. And Cuba is thankfully not that big a piece of the pie.
Can you remind us, do many Americans go to Cuba on holidays, or what is the situation there?
Yeah, sure. So you do have some of the U.S. airlines with flights there, Delta, American, some others. So it is a little bit more complex for U.S. citizens to travel there in terms of the paperwork needed and what have you. Certainly, Canadian and European nationals, it's an easier destination, and probably that's one of the reasons why you really haven't heard about significant dislocation at this juncture of U.S. tourists stuck down there. So Cuba's not a big piece of the pie at all for a U.S. tourist.
That was Stephen Trent, an independent aviation specialist. Still ahead, today's market movers with Bloomberg's Matthew Griffin. Let's check out some of the movers south of the border. We're joined by Bloomberg Equities reporter Matthew Griffin. Matthew, thank you as always for joining us, sir. How are you?
Roger, thank you as always for having me. I'm doing well. Weather warming up a little down here in New York. How are you doing?
We'll take it. We'll take that warmth. S&P, though, is not warming up. It's going the other way.
No, S&P Global really having a tough day, down more than 9%. Last time I looked at the numbers, this stock is getting hammered after the provider of bond ratings, other financial data, said that their profit would be lower than what analysts were looking for this year. So S&P Global forecast adjusted earnings per share of up to $19.65 US. Wall Street wanted $20. This guidance has gotten a lot of focus from analysts, but also the context in which it lands is probably doing the stock no favors. S&P Global has been one of the data analysis companies that has been hit in recent days by fears that AI tools will disrupt their business model. And so Baird said, yes, there were some soft spots in the results and guidance that they gave, but also that the bid under their sector is unusually weak because of those AI fears. So that has the stock now down more than 20% year to date. And if you look at today's trading, peers like Moody's, like NASDAQ, also trading lower.
All right. Harley Davidson, it's amazing what a phone call can do.
Yes, Harley-Davidson, an example of a company not currently selling off after some initial disappointment. So the motorcycle manufacturer reported a surprising drop in their motorcycle shipments for the most recent quarter, down 4%. Analysts actually were looking for a 22% increase.
Wow.
So this stock has sent investors on a bit of a roller coaster ride since, down as much as 15% in the pre-market session. But as you were saying, the conference call seems to have cheered Wall Street up. Their executives struck an upbeat tone about efforts they're doing to, for example, repair relationships with dealers. CEO Artie Starrs talked about getting dealer inventories to the right size, focusing on stocking better products. And this, what a Loop Capital analyst told my colleagues, is executives sounded good on the call. Also, investors maybe see the worst as behind this company as they deal with soft demand, deal with tariffs. And so maybe they're poised to outperform against their guidance for this year.
Yeah, I love that one quote. Basically, all the bad news has been confirmed and is out of the way. Okay, that's one way to look at it. And if you're going to ride your Harley, you might want to listen to some music. Spotify, apparently a lot of people listening to it.
Yes, in fact, a record increase in the number of people listening to Spotify. This company, of course, is Swedish, but traded in the U.S., up about 15% today. They reported a 38 million increase in their number of users to 751 million. That's more than Wall Street expected. A couple things feeding into that: the Spotify Wrapped year-end promotion, where you can look back on the music you listen to. Also, the rollout of a new enhanced free tier around the world. So Wall Street very positive on the user numbers, also giving them points for their gross margins, which hit a record 33.1% in the quarter. That's an important metric for them. And remember, this company has two new co-CEOs as of the beginning of the year, Gustav Soderstrom and Alex Nordstrom. So this is kind of an early win for them and helping reverse a little bit of the share weakness we've seen in the first part of the year.
And with that, the new free tier, what is it? Do you know? Put you on the spot.
You know, I'm not fully up on the details of that, but you know, again, you imagine that anything that is boosting the experience for free users is a positive for a company that really depends on the raw number of users as a key metric.
And they're getting a lot of raw numbers at that. All right, sir. Matthew, always a pleasure. Thanks for joining us.
Thanks for having me.
That was Bloomberg's Matthew Griffin. And let's take a look at the market, see what's happening north and south of the border right now. Just before we go, quick little peek as we head into the lunch hour. And the TSX, you can see it is up. What are we at now? Look, it's up almost 30% for the year. And it's into record territory, above 33,000. Actually, it was over 33,200 earlier. Okay, it's dipped off. It's dropped off a little bit, but still having a good day. South of the border, the S&P 500 just can't crack that 7,000 right now. And the NASDAQ is having an off day as well. And that wraps up this edition of Trading Day. I'm Roger Peterson. Thank you very much for joining us. Have a great afternoon.